Discovery has reported a strong set of interim results. Headline earnings rose 29% to 5.7 billion rand for the 6 months to December. That performance was supported by improved financial leverage and solid growth across its South African operations, while its global Vitality business delivered profit growth of 41%. A key highlight was Discovery Bank, which turned its first normalized profit of 75 million rand, reversing a 145 million rand loss. That's as its client base expanded 28% to 1.4 million. An interim dividend of R1.11 per share has been declared. Nedbank has reported modest growth for the year to end December. That's as headline earnings ticked up 2% to 17.2 billion rand. And this comes as South Africa's fourth largest lender by assets has expanded its customer base to 8 million clients. It's the first time in the firm's 138-year history that it's managed to do this thanks to a rise in digitally active customers. Looking ahead, CEO Jason Quinn says return on equity for the 2026 financial year is likely to come in above 15% and build in the medium term to about 17%. This will be supported by stronger revenue growth and a well-managed expense base. Shoprite has delivered another period of steady growth despite trading in an environment of very low selling price inflation. The retailer grew half-year sales by just over 7% to almost 137 billion rand and says it kept prices tight to help customers. Supermarket South Africa, its biggest division, grew sales by 7.1%, while the 60/60 delivery service jumped more than 34%. Headline earnings rose almost 8%, and it's lifted its interim dividend by a similar margin. Restructuring costs weighed on Aspen's half-year profit. The firm took a 695 million rand hit related to its local and French sterile manufacturing facilities, and that weighed on its bottom line, with headline earnings per share declining by a third. CEO Stephen Saad says the period reflects transitional impacts aligned with guidance and that he's confident that the group can deliver sustainable earnings growth and deliver on its strategic objectives. Sea Harvest has reeled in record results for 2025, with operating profit more than doubling to 1.3 billion rand. Headline earnings per share surged nearly fourfold to 219 cents. Stronger hake catch rates, higher pricing and tight cost control underpinned the upbeat numbers. Sea Harvest says its dairy and Australian businesses saw improved performances, but its abalone unit faced a challenging year amid subdued demand in Hong Kong and China, along with increased competition. The firms rewarded shareholders with a dividend of 76 cents, significantly higher than last year's payout of 22 cents. Those record results from Sea Harvest have given Brimstone a lift. The investment group has attributed its 98% jump in annual headline earnings per share to gains at the fishing company. It's also indicated that lower finance and operating costs helped. A final dividend of 42 cents has been declared, which is slightly higher than the previous period's payout. WBHO has reported a 4% decline in interim revenue to 14 billion rand. That's as the construction firm dealt with lower activity in parts of South Africa and a subdued UK market. Operating profit fell 3%, but improved margins and disciplined cost control helped keep earnings per share steady at around 10.86 rand. The group's order book remains substantial at 36.4 billion rand, and an unchanged interim dividend of 3 rand per share has been declared. IOCO expects a sharp jump in interim earnings. Its forecast earnings per share of between 27 and 30 cents. That's up by as much as 58% from a year ago. The group says the improvement reflects early gains from its turnaround strategy, which includes a focus on cost cuts, a decentralized model, and disciplined capital allocation. As part of that strategy, Ayoko has repurchased nearly 2.9 million shares in the past month, taking total buybacks since August to more than 9.3 million shares. The board says the company remains solvent and well capitalized, with results due for release around the 18th of March.